Let's have a look at the business cycle in the developed markets. Our view is that we are in a late phase and we do not expect any acceleration of growth going forward. First, have a look at private consumption. Private consumption is about 2/3 of GDP in the developed world, and private consumption follows very well labor market development. What we do observe in the UK, in Europe, and in the US is that job creation has peaked and is kind of slowing down, and we do expect that private consumption will slow down as well. The second element is about investment. You have two types of investment: investment in equipment, investment in infrastructure. If you want to re-industrialize your country, as Mr. Trump wants to do, you need to invest in equipment. But here, if you look at the data, you will see there is no need for more investment in this area. If you look at the second part, investment in infrastructure, yeah, there is need, definitely. This is not the question, but it will take time until the first bridge will be reconstructed. So all in all, we do expect growth this year to be more or less the same as it was last year in the developed world. Inflation is a big unknown in our scenario, but we believe that inflation will actually remain pretty modest going forward in all developed markets. We have to look at oil price today in comparison to oil price last January. And we see there is a big difference. This big difference is called base effect. And this difference we'll see in the headline inflation. So it means that in the first quarter of this year, in Europe, in the US, more or less everywhere in the world, inflation will go high and then subsequently go down. If we take inflation without oil price, without food prices, this is what is called core inflation. It's likely to remain pretty flat during the year, and we do not expect any major pickup going forward. Among all the economic risks we can imagine, we will pick two today. The first one is about the strength of the US dollar. This was a topic that we discussed already extensively last year, but we believe this is still a topic that is important to have in mind this year. The US dollar is not too strong for the US economy, but it's too strong for the rest of the world. And in particular, it is too strong for China when we see that the balance of payment is unsustainable with such a strong US dollar. So we have to keep in mind and keep an eye on development over there. The second one is about higher yields. We have observed at the end of last year that all government bond yields went up, also in Europe. And what's important is not so much the level of the yields itself, but the levels of the yield in comparison to nominal growth. And if yields are higher than nominal growth, then debt to GDP goes higher. And obviously in weak countries in the periphery, such as Portugal, Italy, and obviously Greece, it can create a situation which is unsustainable and potentially open the door to a new chapter of the euro crisis. Political agenda is very heavy this year. On the one hand, in the US, we know who is the next president of the United States, but we have no idea what he will actually do. In Europe, this is a bit different because there is a lot of votes. We don't know yet who will win, obviously, and we don't know what will be decided. And this is the case for Netherlands, this is the case for France, this is the case for Germany. What I believe is important to look at is preoccupation and perception of citizens in different nations, and that will help us to understand in which direction the election can go. Goodbye and see you soon.